Good afternoon. This is Todd Horwitz coming from the floor of the CME Group in Chicago. And as we continue to follow the progress of gold, we ask the question, is gold being driven by fear, or is it really just a currency? Now, as I look at gold, I think it's just a currency. I think it follows more or less the dollar. It is benchmarked against the US dollar. And of course, when you look at it, as a fear trade, I think that you don't see as much explosion as you do when it's against the currency. So I think gold, although extremely weak here, is more of a currency, and that's kind of what we look for when we watch these metals. And of course, what I look here is I think we can now declare the bear market over in gold. I think that when you look at the overall picture, we've now seen that last push down to 1,200 a couple of months ago, and we've slowly ground our way up. And now, with yesterday, we put 1331 in as a recent high, and are now pulling back a little bit. I think when you look at the overall picture, 1300 looks to be a great support level. I think what we're going to see is probably a little bit of a pullback, probably some consolidating here, maybe a dip down to 1300, which is where we'd want to step in and buy. And then I think we run to 1340 and then possibly 1370. Again, it's these levels we want to march up. And of course, the longer term high here is 1370, which I think will come into play. And you want to see what happens there. But in the meantime, I don't see a lot of downward momentum here. I don't see a lot of chances for downward action. The markets look very strong. And of course, if the dollar continues to remain weak, I think that even makes a bigger case for the form of gold, because again, that becomes the currency play. We've seen some of the fear trades, but we're not really seeing an overall fear trade. So I think you look for 1300 to be a buyer. You can, if 1310 holds, we may want to start to look there. But in the meantime, our first target here will be 1340, and then we'll look for 1370 after that. In the meantime, it looks like the bear market is over, and we're looking to be buyers of gold. That's the way I see it. This is Todd Horwitz, coming from the floor of the CME Group in Chicago.